After reviewing hundreds of developing traders, I've noticed something. Most traders don't fail because, well, they just simply lack talent. But they fail because they keep repeating the same patterns, often really without realizing it. And the dangerous part here is that these patterns can look completely normal while they're happening. What I'm going to be talking about today are the 4 biggest mistakes that I see in traders who struggle to progress. One of the most interesting things about trader development that I love to see and that I thrive in seeing whenever we have new grads come onto the floor is how similar the sticking points often are. There's different people, different markets, different backgrounds, but often they all carry the same underlying behaviors. And once you can identify them, you can purely start changing them. Now, the first one is probably going to be the most common, which is trying to achieve the outcome before building the trader they need to be. Again, far too many times I've seen grads coming in wanting to be live far too early before earning that true, honest consistency that they need to prove. And again, I just want to reiterate, consistency in process as well as consistency in P&L. They want to be able to go live too early. They want payouts too early. They want bigger size too early or bigger risk. Chasing basically the result that they need or they want before building the right processes and the right foundations. Some of the questions that I hear many times is, when am I going live? I think I've proven enough. I had this really big trade, whatnot. Or when can I start scaling up? Can I have some more size? And they ask all these questions before basically proving the right repeatability that I'm looking to see. Most struggling traders are basically just trying to cash in on a version of themselves that they just haven't built yet, apart from what they've built in their minds. Now, the second one is where we usually learn the most about a grad. And that is when they try to become a different trader of themselves when adversity basically appears, meaning their behavior starts to change after a big loss or a big losing month. Now, of course, we want to see things adapting and things changing. But when I say behavior, I mean their mentality. Okay, I've had 2 big down trades this morning. I've only got X amount of risk left. I'm just going to go for it. That's not the right behavior that we want to see. Now, we also see behavior changes after drawdown. Green to red dates is such a huge one. I've got a grad at the moment who might have a really big green day and it might end red. So the focus there is keep and maintain on green. Even if you've been up 2K, end the day on a green. Too many times do I see frustration happening, chasing, hesitation, over-aggression, loss of structure. And a lot of this actually basically just comes down to emotions. When the emotions get torn in, that's when their whole character of what they perceive themselves to be or what they should be completely changes. Where I have traders who might trade particularly well in the morning and lunch, and they have one bad trade, that could be the thing that moves the needle the other side. That emotional shift is so huge. Now, anyone can follow the right processes, especially when they're in the right rhythm. The right trades come and they're in the right mindset. But where we really learn the most is when that rhythm breaks. Now, the third one is probably the most underrated, which is just traders and grads not truly being honest with themselves. And you'll hear me say that quite a lot, which is honesty. Especially when grads have a losing day. Sometimes they won't even try to find out or know why they lost, what happened that day. Oftentimes they'll blame the market, or they'll blame the volatility, or they might blame news. They might just be overestimating their readiness or missing repeated patterns. And this honesty, especially when it comes to their reviews, and for you at home, really, really take this to account. It's having those weak review habits of putting all the blame there and getting too emotional over it just does not allow you to see yourself clearly. What you really want to be doing is digging deep and saying, okay, well, where did it really go wrong for me? Okay, it was X. Okay, and I've seen this now happen 4 times over this month. This is now a repeatable pattern and I need to change this. The traders who improve fastest usually aren't the most talented. They're usually the ones that are the most honest. And it's so important to have that in your mind when you are preparing for the day, when you are reviewing your day, when you are trading throughout the day. And the fourth and final one is one that I think a lot of traders completely misunderstand, which is mistaking screen time for deliberate practice. For example, watching markets isn't development. Just sitting there staring at a screen, thinking about where the highs and the new lows are of the day. Trading every day isn't development on its own. It's all just repetition. And repetition without review or repetition without adjustment is just going to be a very fast way to not very much, basically. You've got to really make sure that you're journaling properly. You've got to make sure that you're tagging trades if you are tagging trades. You need to track your behavior, work intentionally. Really, again, it all comes back down to those foundations, those processes in your preparation and your reviews. And it might all sound like it all comes into one, and it does, because it's all going to the same goal. But you've really got to make sure that when you are watching the screens, you're doing everything with intent. And with that being said, I've had times where I've had maybe a grad floor of 10, 12 grads, and most of the traders, especially when they're new and they've been here for maybe a month or two, are getting that screen time. But very few of them are actually getting the real and proper deliberate practice. So with those four, what do they all have in common? Because you've probably figured out the theme here. They're all behaviorable, they're all fixable, which is super important. And they all show up super early. And that's so important to understand, because the earlier you can get to them, see them, understand them, and be honest with them, is the quicker you can start improving upon them. Most traders just don't get stuck because they're lacking potential. They're basically getting stuck because they keep repeating patterns they just haven't yet learned to recognize. Now, at the end of the day, and I hope you've probably understood this from this series of videos by now, and of course your own experience, is that trader development usually just isn't about finding a secret setup or just discovering a new strategy. More often than not, it's about identifying the patterns that repeatedly hold you back and gradually replace them with better and better habits. Because the traders who ultimately progress are usually the ones who become better decision makers long before they become more profitable.